What are the companies that new investors should absolutely avoid buying right now, and why should you avoid these companies, and what makes these companies so attractive to new investors to begin with? Let's go ahead and break it down. One of the best ways to invest, and one of the best ways to just go through life, is just avoiding mistakes. Okay, now that is absolutely impossible to be perfect in every single thing that you do. However, when it comes to investing, there are a few things that are glaring mistakes and glaringly terrible companies, probably a better way to say that just aren't good right now in the moment. I'm just going to give you a very quick list because I'm pretty sure we have some of the same goals. I don't think you watch this channel or open an investing app or even save your money to lose it. Okay, I'm not a mind reader, but I'm pretty sure you don't want to lose money. Okay, now here's the list, and here's why I think these are a little more catered to new investors. Some of these companies are name brands, and I know that new investors, and sometimes even medium seasoned investors, if you will, we gravitate to names that we know. I'm gonna give you a hint. Okay, we've talked about this company before, but Nike, it's like, hey, they're not gonna go bankrupt. I remember hearing this phrase a lot with a lot of stocks. Where, hey, they're not gonna go bankrupt. The stock is low. I'm just gonna buy now, and they'll be fine. Okay, they might not go bankrupt. That doesn't mean that you're not gonna lose money. Okay, so companies like that, companies that you may spend money at, that you may go to all the time, and sometimes new investors tend to just gravitate towards that because you see a brick and mortar store, doesn't necessarily mean that that's going to translate and make you money as an investor. All right, so we're going to start off with something in tech sector and work our way down. We give you a 2-for-1, and then the last two companies are going to be extremely important. I'm going to give you two companies that might be good in the future but aren't right now. So I'm going to give you some little nuggets here as we go through. All right, so the first one is Intel. I lost some money on Intel myself, so I'm speaking from experience here. Okay, so it's not just for new investors. INTC is the stock symbol here, but it is down 51%. Thank God I got out when I did, so I didn't have to lose 51% in the last 6 months, and down 34% over the last year. It is one of the few semiconductor stocks that is trash. I'm annoyed here because semiconductor stocks we've been talking about for almost 2 years now, every single one feels like it has done well except for Intel. I can't tell you why, because I sold the stock and I'm mad. I'm not going to go back and find out why. I'm just not. Okay, I'm gonna be transparent with you. All right, I told you guys why I bought it. I tried to do cover calls. Again, I am not perfect here either, but the objective was, you would think, well, at the time, you can go back and watch the video, as at the time we did the video and looked at the chart and did the research, everything was on the up and up. The CHIPS Act had just passed. You would think, right, based on the chart, based on the industry, based on the stock at the time, why would you lose when you had passed a multi-billion-dollar or trillion-dollar bill for you to produce more chips, that the stock would lose, and would lose this much? Didn't expect it. Now, if I remember correctly, I think it was like a lawsuit or something had happened, and that is one of the reasons why the stock had been losing money. Not something that was on my bingo card, but whatever. It's a stock you likely want to avoid. I know many investors still want to make money in tech stocks. There are some that say, well, I don't necessarily want to get in on NVIDIA. I feel like I'm too late. Let me find something that I can buy low and sell high. This just appears to continue going lower. I also want to say this, for the entire list, they may not be good now. That does not prevent them from being good in a year or 2 years or 5 years, okay? The stock market isn't permanent where every stock is bad forever, okay? Right now, they not. Maybe this will change in the future, so we can reevaluate this in some time. All right, next here, this is a 2-for-1, if you will. CVS is trash and so is Walgreens. CVS, the stock symbol is CVS, down 23% in the last 6 months, down 12% over the last year. Walgreens, WBA, down 53% in the last 6 months, down 60% over the last year. These two companies, though they're not together, but they fall into the exact same category, and this is where I see new investors tend to fall, especially people who just got into the stock market. I've talked about this notion before, where a lot of people say, I want to get into the stock market, what should I buy? Look around the room, see where you spend money, so on and so forth. Like, I always get my allergy medicine at the closest Walgreens, literally just because it's close, and that's it. nothing special about Walgreens that I think of other than those extremely long receipts. Maybe that's why they lose so much money, because they spend so much money on extremely long receipts. I don't know, right? But the main thing is, it's just there, right? And people just tend to buy it because I go there and there are cars out front. Therefore, I'm sure they make money, so I'm gonna go buy the stock. It's not necessarily how it works. You want to see whether or not the stock has been up. The answer is no. It hasn't been up for quite a while. Same thing with CVS, though CVS feels just more depressing when I walk in there. But again, even though the inside of a CVS is soul crushing and just depressing, that's not a stock analysis. Now, in this case, yes, right? But generally, whether the store was bustling and there are tons of people in there, either way, it's not a stock analysis in either case. Both right now are trash. Don't forget that CVS also spent millions of dollars on the metaverse. How did that work out? All right, next here is Etsy. Etsy is an interesting case because I feel like their marketing and branding feels more upbeat, and I would assume that the stock would have been doing better than what it actually is. We're moving closer to the holiday season, so I would expect the stock to do much better than it actually is, but it is not. It is down 27% in the last 6 months and down 25% over the last year. Again, this is just me expecting the stock to have done better. And yeah, if I'm a new investor, again, not really digging into the research and what is going on with Etsy, I would expect, again, inflation is going up, right? People are looking for extra ways to make money and close the gap between what they are currently making and what prices are skyrocketing to. Maybe you are artsy and crafty. That's not me, but perhaps I'm trying to make and sell stuff on Etsy and get my products out there and make up that gap. People were doing this during the pandemic and doing quite well, and the stock was also doing quite well. I would assume, okay, these are my guesses, right? And if I'm walking my logic back when I was a new investor, I would assume that people are trying to do this right now and get their side hustle on, which is what people were doing during the pandemic. Apparently that is not the case. So Etsy, not a stock that you want to consider right now. Maybe this will change during the holiday season. I'm not entirely sure, but I would assume that the stock would have picked up by now. Probably not a company that you really want to have high on your watch list at this point in time. Next here is American Airlines. The stock symbol is AAL, down 29% in the last 6 months, down 30% over the last year. Not a great stock. I can't say that it's never been a great stock. Airline stocks generally, not all the time, generally just have not done well. Delta Airlines did have a moment earlier this year, so that was there, but this is a hard business to make money in. Speaking of making money, don't forget that I do teach a free class almost every single day on how you can create your first six-figure investing plan regardless of what your salary is. We work backwards. Start with what the goal is, how much you need to invest, and then what you need to invest in. So working backwards helps us to work in what those figures are and how long it is going to take you. You want to make sure that you register for it. That link is right here, also in the description below, so you want to make sure you register. Again, totally free. All right, let's go ahead and continue with our list. Next here, I have another airline, love, that is Southwest Airlines. This one is interesting. This one's extremely interesting. Now, right now, it's down 21% over the last 6 months and down 17% over last year. However, I considered, and maybe we talked about it in the comments, they had a major investor a few months ago join the company, and they could be shaking some things up. I'm not going to do an entire soliloquy around it now. If you do want me to go at length on what is going on with Southwest Airlines, I'm interested in it. I would love to do a video on it, but if only 5 of y'all gonna watch, I'm not gonna do it. Okay, so y'all, I'm gonna need like 5 or 6 people in the comments to want me to do that video for me to do it. But long story short, a new investor joined, and Southwest is going to change a whole lot of stuff. They're not going to do the free-for-all boarding. At some point, they are going to change their strategy to become more like Delta, more like American. That could mean that they could make more money like Delta, like American, and may improve the stock price. Now, you had just said that American Airlines stock was also down. That is true, but Southwest has not activating, if you will, a lot of the profit margins and things and levers that they could pull in the way that some of these other airlines could. For example, Southwest allows you to do 2 bags free. Southwest doesn't charge a change fee. They could do that stuff. Now, that would suck as a consumer. I'm telling you right now, as a parent that, you know, has 2 smaller kids where I can pack all the stuff I need when they were younger. I could just pack a whole suitcase of diapers and toys for free. That was great, right? Now, that would be terrible if I now have to pay $50 or $75 for that bag. And now, you know, now I'm stuck, right? Now I gotta, you know, pay that plus a seat fee plus a change fee because something happened. That is an extra $200 or $250 for Southwest that they are not hitting me over the head with, right? They could do that. I would hate it. I would absolutely hate that, but they could do it. If they did do it, I'd just drive, or I'm just not gonna go nowhere no more. But that is what that investor could do. But right now, they're getting rid of the whole seating arrangement thing, and they're going to do assigned seating. If you check the comments on some of Southwest's posts when they did this about 2 weeks ago, or said they're going to do it starting in 2025, people are upset. Okay, so just throwing it out there. Let me know if you want me to go in detail about that. Next here is Nike. Now, we did an entire video on Nike and what is going on with the company, so I'm not going to go into detail here. Down 18% in the last 6 months and down 18% in the last 6 months, if I said that correctly, down 19% over the last year. It ain't good, okay? It is not good. I don't know how they're going to fix it, but it needs to be fixed. Another one of those very, very strong brands, strong company history, again, branding and marketing. It ain't translating into sales for you. I had to let go of Nike for my kids. Nike was my son. He's 6 now. It was one of his very first stocks and one of his best performers. Okay, imagine owning a stock for your entire life and having to let it go because it has been that bad for so long. Can't get emotionally tied to it. Okay, he is technically a beginning investor. Okay, because he's only 6. And it was, again, one of his very first stocks. We had to let it go. All right. Next here is... this one is rough. It's a little rough because we've kind of waffled on it, but the stock has waffled. That is Disney. I've gone from hot to cold to medium on Disney. And if you look at a stock chart, that is because Disney has gone from hot to cold to medium on itself. So Disney is down 17% in the last 6 months, but up 5% over the last year. Like, think about that. Being down almost 20 in just 6 months, but still be positive over the year. If you go back and look, which is around the time that we did a video at the end of last year, near the end of last year, between November to April, the stock took off. It absolutely took off. We talked about how the stock was about to take off, and it did. And it did, and then it stopped. And then things have absolutely fallen off a cliff. So it was a very brief takeoff, and then things have just fallen apart, and I have no idea what is going to happen with Disney next. Disney, I feel like, is the stock that suckers in the most new investors because of the brand and because of what Disney means to so many people in so many different categories. What I have read so far about Disney, they still don't have leadership at the top in terms of who Bob Iger, the current CEO, is supposed to tap next. He came in last year after a whole kerfuffle, if you will, and who was supposed to come in next. He said, hey, I'm only going to be here for a little bit. I'm going to name the next successor. That successor that he named didn't work. So there's that. He had a fight with the governor, or Disney itself had a fight with the governor in Florida. People are complaining at the parks because it is too expensive, and that is a fact. So stuff is all over the place, but the movies, Deadpool and Wolverine, brought in more than $1 billion. So things are mixed. Things are mixed at the House of Mouse. And again, because it means so many things to different people, I'm a Marvel guy. I'm in it, right? It means something to me. My kids love a lot of the cartoons and stuff. It means something to them. You've got people like my wife who have been to Disney as a kid, often. Right? Again, it certainly wasn't every year, right? But often, and it means something to her. So Disney means things to a lot of different people. That doesn't mean that the stock has to rise, and it certainly has not. I've also argued if you took out 2020, that whole 2019, 2020-ish, if you take that away, Disney stock has been flat for almost a decade. Almost a decade. That ain't great. Okay, I would argue that Disney stock as a whole has been relatively overrated, and we might have a case to have there. So if you want to learn more about Disney in itself, you definitely want to go back and check out those videos. However, if you want to learn more about what stocks you might want to consider buying right now as a new investor or as an investor period, you want to check out these videos right here.